If you have been watching the financial news lately, you have probably felt it. That strange sensation that the ground beneath our feet is shifting. For decades, the financial experts told us to ignore precious metals. They told us that gold was an old-fashioned relic. They told us that silver was dead money that never moved. They told us to buy technology stocks or cryptocurrency or real estate. But then 2025 happened. Welcome to the new reality. Today is January 5th, 2026, and the world looks very different than it did just 1 year ago. Gold has shattered the $4,500 mark. In India, that is over 1,37,000 rupees for just 10 grams. Silver, the metal they told you to ignore, has torn through $70 an ounce. We are witnessing something that has not happened in 50 years. This is not just a price increase. This is a global repricing. It is the moment where real money, money you can hold in your hand, reclaims its throne from paper money. Hello and welcome. If you are watching this, you might be feeling two things right now. First, you might be excited because you see these prices and you realize something big is happening. But second, you might be feeling fear. Fear that you have missed the boat. Fear that it is too late to buy, or maybe fear about why the price is going up so fast. I am here to tell you, you have not missed the boat. The boat has only just left the harbor. In this video, we are going to go deep. We are not just going to look at price charts. We are going to look at the engine driving this car. We are going to talk about the new export laws in China that changed everything last week. We are going to talk about the solar energy panic that companies are trying to hide. And we will look at the silent war central banks are waging against the United States dollar. By the end of this, you will understand why many experts believe that $5,000 gold and $100 silver is not a fantasy. It might actually be a conservative estimate. Let's begin. Let us look at the numbers as they stand today in January 2026. Gold is trading near $4,500. Silver is trading near $70. To understand how crazy this is, we have to look back just 12 months. 1 year ago, gold was sitting around $2,700. That means it has gone up nearly 65% in a single year. That is a massive move for a safety asset. But look at silver. 1 year ago, silver was sitting at roughly $32. Today, it is at $70. That is a 120% increase. Silver has more than doubled. Now, I want to teach you something very important. Traditionally, economists will tell you that when interest rates are high, gold should go down. Why? Because gold does not pay you interest. If the bank pays you 5% to keep your money in a savings account, why would you hold a lump of metal? But in 2025, that rule broke. Interest rates stayed high, yet gold went up anyway. Why? Because the big buyers, the central banks of China, Russia, Poland, and India, stopped caring about interest. They started caring about survival. Imagine you are living in a wooden house and you smell smoke. Do you care if your bank account is earning 5% interest? No, you care about fire insurance. Gold is that fire insurance. Countries around the world have realized that the United States government is $36 trillion in debt. They are worried that the dollar might lose its value. So they are dumping dollars and buying gold. They are not buying it to get rich. They are buying it because they don't trust the paper system anymore. And this brings us to the most critical story of 2026. The story that explains why silver is suddenly exploding. If you take only one thing away from this video, let it be this section. We call it the China shock. On January 1st, 2026, just a few days ago, the Chinese government implemented a new system for exporting silver. They call it strategic resource licensing. That is a fancy name for a simple fact. China is stopping its silver from leaving the country. Why does this matter? China is the world's largest refiner of silver. For 20 years, they have been the factory of the world. They dig up silver, they refine it, and they sell it to the world. But now China has realized they have a problem. China produces over 80% of the world's solar panels. You cannot make a solar panel without silver paste. It is physically impossible with current technology. China has looked at their own mines and realized, we don't have enough. They know that if they export their silver to the United States or India, their own solar factories will stop working. So they did what any country would do to protect itself. They closed the gates. Think of the silver market like a bathtub. For years, the water, which represents the silver supply, was flowing freely between countries. If Apple needed silver for iPhones or Tesla needed silver for cars, they could buy it from anywhere. But now China has put a wall in the middle of the bathtub. They are keeping their water for themselves. This has created a panic in the West. Imagine you are a factory owner in Europe. You used to buy your silver from China. Suddenly, your supplier calls you and says, sorry, the government won't give me a license to send this to you. What do? You panic. You call a supplier in Mexico. You call a supplier in Peru. You say, I will pay anything. Just get me the metal. That is why the price jumped from $50 to $70 so quickly. It is not speculation. It is a bidding war. Manufacturers are fighting each other for the remaining scraps of silver available outside of China. And the scary part? This is just the beginning. Because while the supply is shrinking, the demand is doing something we have never seen before. To understand why silver is moving faster than gold, we have to look at one simple word: consumption. If you buy a gold coin and put it in a safe, that gold still exists. If you buy a gold necklace, that gold still exists. In fact, experts believe that nearly 98% of all the gold ever mined in human history is still above ground in some form. But silver? Silver is different. Silver is a working metal. Silver is the most reflective element on the periodic table. It is also the most thermally and electrically conductive. Because of these unique properties, we use it in almost every piece of technology you own. It is in your cell phone. It is in your laptop. It is in the switches in your house and the engine of your car. But here's the problem. In a cell phone, there is only a tiny amount of silver, perhaps a few milligrams. When that cell phone breaks and you throw it away, it goes into a landfill. Because the amount of silver in each phone is so small, it is too expensive to recycle. It costs more money to get the silver out of the phone than the silver itself is worth. So we throw it away. Think about the gravity of that. Every single day for the last 30 years, we have been burning our silver supply. We are taking it out of the ground, putting it into a device, and then burying it back in a trash heap where it can never be recovered. We are literally running out of accessible silver. Now let's look at the three vampires of silver demand that are sucking the supply dry in 2026. First, the solar energy revolution. A decade ago, the solar industry used a small fraction of the world's silver. But today, as every country tries to move away from oil and coal, solar demand has exploded. New types of solar panels called TOPCon cells require 50% more silver than the older models. In 2025, the solar industry alone consumed nearly 30% of all the silver mined in the world. Second, electric vehicles. A standard gasoline car uses about 20 grams of silver for its electrical systems. An electric vehicle uses between 30 and 50 grams. As the world switches to electric vehicles, the silver demand for the car industry has doubled. Third, artificial intelligence. This is the new one. The massive data centers that power artificial intelligence require massive amounts of electricity. To handle that power without melting, the chips and connectors must use silver. So we have a situation where supply is falling because mines are getting older, and demand is skyrocketing because of technology. This has created what we call a structural deficit. For 5 years in a row, the world has used more silver than it has mined. We have been surviving by using the stockpiles sitting in vaults in London and New York. But as of January 2026, those vaults are nearly empty. When the vaults hit zero, the price doesn't just go up, it teleports. And that is exactly what we are seeing right now. Now let us move away from the factories and look at the banks. Why is gold hitting $4,500? It is because of a simple mathematical reality. The United States dollar is in a debt trap. Currently, the United States owes over $36 trillion. To give you an idea of how big that number is, if you spent $1 every second, it would take you over 1 million years to pay it back. The United States government has to pay interest on that debt. Because interest rates have been high, the interest payment alone is now over $1 trillion per year. That is more money than they spend on their entire military. So how do they pay for it? They only have two choices. Choice one, they can raise taxes, but if they raise taxes too much, the economy will crash. Choice two, they can print more money. Historically, every government in the history of the world has chosen choice number two. They print the money. But when you print more money, the value of the money already in your pocket goes down. This is what we call inflation. Gold is the only currency that a government cannot print. You cannot click a button and create 10,000 tons of gold. You have to find it, dig it, and refine it. It takes years. In 2025, the world watched as the United States debt went vertical. Investors realized that the government can never truly pay this money back. The only way out is to devalue the dollar. This is why gold is rising. It is not that gold is becoming more valuable. It is that the dollar is becoming less valuable. Think of it like a boat in a harbor. If the tide goes out, the boat doesn't sink. The water level just drops. Gold is the boat. The dollar is the water. For my viewers in India, this is even more critical. You have seen the price of gold in rupees hit record highs. This is because you are facing a double whammy. The rupee is getting weaker against the dollar, and the dollar is getting weaker against gold. This is why Indian households have been the smartest investors in the world for centuries. They didn't need a PhD in economics to know that paper money is a promise that can be broken, but gold is a physical reality that cannot be faked. But here is the intelligent twist that most people are missing in 2026. As the dollar weakens, people look for an alternative. Gold is the first choice, but gold is now very expensive. At $4,500, a small investor cannot easily buy a full ounce of gold. So where do they go? They go to the poor man's gold. They go to silver. And because the silver market is so much smaller than the gold market, when that panic money flows into silver, the price doesn't just rise, it explodes like a volcano. Whenever silver starts to move this fast, people bring up two names, Nelson Bunker Hunt and Herbert Hunt, the Hunt brothers. In the late 1970s, these two billionaire brothers from Texas decided that the United States dollar was going to collapse. They were worried about inflation, just like we are today. But they didn't just buy some silver, they tried to corner the market. By 1980, it is estimated the Hunt brothers owned 1/3 of all the privately held silver in the entire world. Their massive buying spree pushed the price from about $6 to nearly $50 an ounce. But then the rules changed. The government and the commodity exchanges realized that the Hunt brothers were using borrowed money, leverage, to buy more and more. So the exchanges changed the rules overnight. They raised the margin requirements, meaning the brothers suddenly had to come up with billions of dollars in cash that they didn't have. On a day known as Silver Thursday, the market crashed. Silver dropped from $50 to under $11 in just a few weeks. Now, why am I telling you this? Because critics will say, see, silver is just a bubble that will crash again. But there is a massive difference between 1980 and 2026. The Hunt brothers' rally was artificial. It was driven by two men and a mountain of debt. Once the debt was called in, the price collapsed because the real demand wasn't there. Today, the rally is not being driven by two billionaires. It is being driven by millions of solar panels, millions of electric vehicles, and thousands of artificial intelligence data centers. In 1980, silver was a luxury. In 2026, silver is a necessity for the modern world to function. You can change the trading rules for billionaires, but you cannot change the laws of physics. If a factory needs silver to build a semiconductor, they will pay whatever price is necessary. This is why this rally has legs that 1980 never had. So let us look at the roadmap for the rest of 2026. Is $100 silver really possible? If you look at the gold to silver ratio, the answer is a resounding yes. Historically, for hundreds of years, the price of gold was about 15 times the price of silver. In the modern era, that ratio has hovered around 70 or 80. As I speak to you today, gold is at $4,500. If the ratio simply returns to its normal modern level of 40 to 1, 4,500 divided by 40 equals $112. Even major banks like Bank of America and Citigroup, who are usually very conservative, have raised their targets. They are seeing that the London vaults, the place where the world's physical silver is stored, have seen their stocks drop by over 70% since 2020. We are entering a phase called price discovery. This is a fancy way of saying the market doesn't actually know what silver is worth, because for so long, the price was kept low by paper contracts. Now that people want the physical metal, the true value is being revealed. However, I must give you a warning. Next week, between January 8th and January 10th, we might see a scary dip. Major commodity indices are rebalancing their portfolios, which might force some automated selling of silver. Do not panic. In a bull market, these dips are not the end. They are the gift. They are the moments where the weak hands sell and the strong hands buy more. If you are convinced that you need to own some of this real money, how should you do it? First, physical bullion. For most of you, owning the physical metal is the safest bet. In India, make sure you look for Bureau of Indian Standards hallmarking. For silver, look for 999 purity. Avoid buying jewelry as an investment. When you buy a necklace, you pay for the making charges and the artistry. When you sell it, you only get paid for the weight of the metal. Buy coins or bars instead. Second, digital gold and silver. If you don't want to worry about a locker or security, digital gold is a great option. It allows you to buy in small amounts, even 100 rupees at a time. This is perfect for dollar cost averaging. Third, a word of caution on scams. In a market this hot, the fake sellers come out of the woodwork. If someone offers you silver at a price below market rate, it is a scam. If a website looks unprofessional or promises guaranteed 300% returns, walk away. We have covered a lot in this hour. We talked about the China export ban. We talked about the industrial vacuum of solar and artificial intelligence. We looked at the mountain of United States debt that is pushing gold to the moon. My final message to you is this: do not try to get rich quick. Gold and silver are not lottery tickets. They are wealth insurance. The world is changing. The paper era is ending, and the hard asset era is beginning. You don't need to be a billionaire to protect your family. You just need to be patient, be disciplined, and understand that in a world of $36 trillion of debt, the only thing you can truly trust is what you can hold in your hand. Thank you for spending time with me. If you found this deep dive helpful, hit the subscribe button and share this with someone who is still holding only paper. I'm Sude, and I will see you in the next update. Stay safe and stay invested in what's real.